dead, destroyed thousands of homes and commercial properties, and caused billions of dollars in damage. A new survey from NORC at the University of Chicago finds only 13% of homeowners have begun reconstruction, 13%. And more than 70% of residents are still very concerned that insurance will not cover all the costs to rebuild. The LA County Recovers Board reported that only 4 homes have actually been completely rebuilt out of the roughly 11,000 that were destroyed. 4 homes in 1 year.
A California family survives the state's most destructive wildfire, only to face nearly $40,000 in fees before rebuilding can even begin. Their insurance payout falls $250,000 short, and with many major insurers stepping away from the state, recovery becomes more about money than fire damage. Rebuilding has stalled across many areas, leaving families stuck in limbo and unable to return home.
It destroyed more than 19,000 structures, mostly homes and businesses. The list also includes numerous synagogues and churches.
Before construction starts, homeowners receive city or county bills that can reach $40,000, especially in LA County. Base permit and inspection fees for a single-family home often top $20,000 in areas like the Pacific Palisades. Properties in the coastal zone face additional requirements, including development permits, environmental review, and planning fees that can add another $15,000 to $20,000. These costs are mandatory and must be paid upfront even when families are simply replacing what was lost.
Some very high winds helping to fuel a fast-growing wildfire. Now, this pack fire, it's called, is burning near the popular Mammoth Mountain Ski Resort that's in Northern California. It's damaged at least 15 buildings.
According to LA County planning, fees are set by ordinance and based on home size, location, and estimated construction value. When combined, building permits, plan checks, department reviews, and utility connections, the total for a coastal property can approach $60,000. In other parts of the county, homeowners typically face between $35,000 and $45,000 before construction begins. After the January fires, the mayor issued an emergency order pausing fee collection while the city council discussed a permanent waiver. No law has officially removed the charges.
The rain could help control the fire, but in Southern California, it's the flooding and the mudslides. Those are the big concerns there.
Homeowners must sign contingency agreements stating that if the waiver does not pass, the full amount could still be due, sometimes as a lump sum. For many families, this first bill signals that recovery will be measured not just in time, but in money. Insurance was meant to provide protection, yet many survivors say it falls short. A University of Chicago survey found that 71% of homeowners in high-risk fire zones worry their coverage will not fully pay for rebuilding costs. Research after the fire supports those concerns.
Late Thursday night, damaging more than a dozen homes and scorching more than 3,000 acres. It's fueled by high winds from an atmospheric river.
A CU Boulder study reported that about 74% of affected households were underinsured, often by large amounts. The gap between insurance payouts and actual rebuilding costs commonly ranges from $100,000 to $250,000, and in some neighborhoods it is even higher. In areas like Pacific Palisades or Altadena, rebuilding can cost up to $1,000 per square foot. The state's insurer of last resort, the FAIR Plan, averages just under $1 million in coverage for a single-family home, while total rebuilding costs can reach $2.5 million or more.
The firestorm officials had feared becoming a reality, with a third out-of-control wildfire exploding overnight.
This leaves many families facing significant financial shortfalls before permits or temporary living expenses are even considered. A FAIR Plan analyst explains it simply. Many policy limits were based on past prices, not today's rebuilding costs. Families often realize too late that their full coverage does not fully cover current expenses. The difference becomes their responsibility. As premiums rise and private insurers scale back, more homeowners turn to limited policies, locking in coverage gaps for years in wildfire-prone areas.
Coastal neighborhood Pacific Palisades, multiple homes completely engulfed in flames, with desperate residents rushing to get out.
In many communities, insurance availability has declined almost as quickly as housing supply. Since 2021, more than 15 major insurers have stopped issuing new homeowners policies or sharply reduced coverage in higher risk areas. State Farm, the state's largest home insurer, paused new applications and chose not to renew tens of thousands of existing policies, about 2% of its statewide total, with notable impact in hillside and canyon communities. All-state farmers and Nationwide also tightened guidelines or stepped away from certain zip codes. For many households, the remaining option is the California Fair Plan, the state's insurer of last resort. However, the Fair Plan provides limited coverage, and its total exposure has grown significantly from about $150 billion in 2020 to roughly $700 billion by 2025. Industry analysts note that much of this growth is concentrated in counties with higher wildfire risk, including Los Angeles. A recent consulting analysis estimates that the gap between insured values and actual rebuilding costs statewide now ranges from $800 billion to $1.3 trillion. An industry analyst says the coverage gap is no longer theoretical. For many people in high-risk zones, it has become a financial reality. Homeowners face higher premiums, lower policy limits, and large out-of-pocket costs if a disaster occurs. Anna carries a small notebook filled with figures that still do not balance. Her insurance payout was $750,000, exactly what her policy promised. The lowest construction estimate came in at $1,054,000, creating a $300 to $4,000 shortfall before permits, furnishings, or building even began. Temporary housing costs $4,200 per month for an apartment across town. At the same time, the mortgage payment of $2,800 continues on the original property. Insurance helps with part of the rent, but reimbursements move slowly and the coverage limit may expire before rebuilding is complete. Over 11 months, Anna paid both rent and mortgage while waiting for permits and claim payments. By the time the city approved her plans, she had spent $46,200 on rent and $30,800 on mortgage payments. Interest on a construction loan added another $18,000. Her records show a widening financial gap, with each delay increasing the challenge of returning home. Each day spent waiting for a permit comes with a measurable cost. In Los Angeles, the average city permitting timeline for wildfire rebuilds is about 79 days. In unincorporated county areas, it can stretch to 131 days. During that period, displaced homeowners often pay $3,000 to $5,000 per month for temporary housing while still covering a mortgage on a property that has not yet been rebuilt. As construction prices continue to rise, every delay increases the final expense. 1 month of overlap between rent and mortgage can total $7,000 or more, not including higher material costs. The permitting process becomes more than paperwork. It steadily reduces savings and strains finances. By the time approvals come through, the cumulative cost of waiting can approach a significant share of the rebuilding budget. In contrast, some regions have adopted faster recovery systems. After the 2021 Marshall Fire, Boulder County, Colorado, activated a dedicated rebuild permit center with pre-approved checklists and staff assigned specifically to assist affected homeowners. Compliant applications were sometimes processed in as little as 10 days, helping reduce temporary housing expenses. Santa Rosa implemented a similar strategy after the Tubbs fire, creating a specialized rebuild desk offering standardized plan templates and completing straightforward reviews in about 5 days. These examples show that when agencies coordinate staffing, simplify reviews, and rely on clear disaster-specific checklists, permit timelines can shrink from months to days. The Boulder Disaster Protocol Director says this preparation saved families significant time and tens of thousands in avoidable soft costs, showing that faster processes are achievable and that every day matters. After the Camp Fire, Paradise faced a rebuilding gap that felt overwhelming. The Paradise Rebuild Foundation responded with targeted grants to cover the difference between insurance payouts and actual construction costs. Most households received between $30,000 and $50,000, enough to handle fees, code updates, or close a financing gap. applicants had to show proof of residency at the time of the fire, document their insurance shortfall, and commit to rebuilding on the original property. The goal was speed, helping families begin construction before expenses increase further. According to the foundation's director, these grants have supported hundreds of households, turning large financial gaps into workable plans and helping restore vacant lots. The model demonstrates that closing the final funding gap is possible with timely, focused support. Today, many households remain in limbo not because of the disaster itself, but because of rebuilding costs. As insurance options narrow and fees rise, the divide between coverage and actual expenses continues to widen. Recovery systems that match the scale of these events remain a key factor in determining how quickly communities can rebuild. Share your thoughts below.